Joe Tigay is a managing partner at Equity Armor Investments. Joe, Square, you ready to ride the Jack Dorsey train back up to highs, or where does this thing go? I mean, how do you play it? It's been a really interesting chart for 2 years.
Yeah, it's been one of those charts that's been moving up and down like we just heard. Of course, recent high a couple weeks ago was 87 and a quarter. I actually think we can go back up there. I think they're, one of the reasons it went down, of course, it went down with MasterCard after they had bad earnings. I don't think that necessarily is the case. I saw a lot of upgrades after that. I think people are going to pile back in, especially into this earning event, seeing these upgrades. I think it's a decent spot to come back in and play it, provided the market can be stable here and not have a 3% down day tomorrow. I think this earnings event could be a catalyst to get it back up closer to all-time highs.
All right. You know, you look at it from the high, and it's obviously down. I don't know if it's in a downtrend, but at least it's made lower highs along the way. So when vol and the way this thing swings, Joe, what kind of opportunity do you see using options?
Yeah, actually, vol is, of course, very elevated, but I'm looking at a call butterfly purchase. I want to be short where I think it's going to land somewhere between 82 and 87, I think would be my target sweet spot for this. And I want to be long the 80 call. I think if we have a good event, we'll be easily top above 80, just in a couple percent above where we are right now. So I'm want to buy that 80, 85, 90 call butterfly. That'd be selling 2 85 calls, buying the 80 and the 90. The 90 just stops me out to the upside. Because I don't think we're necessarily going to see a massive increase post-earnings. But, of course, just want to see a cheaper way to play this call spread where I'm getting along the 80-85. But I also sell the 85-90. That gets it to me a little cheaper. And right now I get that on for about 80 cents. It's not too bad to be long the 80-85 call spread. Pretty good risk reward. Of course, that max gain will be around $5 if I held it through expiration. Not looking really to do that. Just looking to hold it through maybe till Friday, see where we settle out. Maybe vol will come in a little bit. Sweet spot, 82 to 85. Maybe I can double or triple my money in a couple days.
All right.
And of course, bad event. I'm not going to lose all of it because we're looking at a March spread, and of course I'm short the 85. So worst case scenario, maybe this thing on Friday could be 30, 40 cents. So wouldn't completely go worthless. And of course I'd want to dump it then.
Okay, so just to walk through it again, I think it's pretty interesting because you got a lot of different parts to it. One important part is that because you're structuring the call fly with 3 different strikes, is that you've got multiple ways to kind of take this off piecemeal depending on what it does. You've got a bullish sort of tilt to this, but you're not totally committed to it where any downside blows you out, right? You've got some wiggle room to the downside too.
Yeah, and also got some wiggle room on the Vega side. Of course, the vol is going to come in after earnings by selling 2 of the 85s. That's going to cover me up quite a bit. In fact, if we just went to 80, I'd probably still be profitable on this trade because of the vol side of it. Of course, if I bought the 80, 85 call spread by itself, it'd be a little harder to be profitable on just a smaller up move.
Yeah. All right. Hey, Joe, how does it feel down there today? Big macro talk real quick.
Yeah, it's feeling a little bottomy, maybe you could say. A lot of action going on. Interesting though, of course, when I got on the pit about a half an hour ago, saw, of course, the market was on its high around up 30 points, up 1% in the S&P 500, off of its low overnight. So maybe a little choppy reaction. I like to think choppy action could be price disagreement. Sometimes it's a short-term trend change. That might be happening. I think the market's giving the White House the benefit of the doubt today. Hopefully they come out with some sort of calming statement tonight. Yesterday's statement was not very calming. It's kind of a disaster for the market. The market was not happy with that. They're giving them the benefit of the doubt today. By tonight, they'll be able to figure that out. And behind me in the VIX, I'm just seeing a lot of action. And interestingly enough, of course, vol was in the VIX, the VVIX, the VIX of the VIX. It was up at 125 yesterday. It was into 115 today. But the market makers behind me were kind of eager to buy the vol. That tells me that they had come in enough and they were looking to get back out of some of their shorts. Of course, we know the 23s, the 24s. I'm rambling. The 23s, 24s, big open interest in the VIX. Okay, so customer 2 weeks ago came in and bought those strikes. Market makers behind me sold them. So that was one of the reasons why we had a hard time in the front month future cracking that area. So the VIX was at 30. The front month future stalled out yesterday at 23. So a big gap, 7-point gap. A lot of vol traders, maybe trading VXX or UVXY to the long side, might have been expecting that to be tracking VIX a little closer. The reason it didn't, because the open interest in the future, in the options at the 23-24 strike, a lot of gamma trading was pinning it right there in between those 23 and 24 strikes. If we got above 24 in the future, I think you could snap it, see up to 30. That's kind of how that gamma could work, because the market makers, of course, were short it, looking to get out of some of their deltas, of course, as we play. So we know the 50-cent trader came in, bought those strikes.
Yeah,
maybe he was getting out of it, getting out of those deltas. So so here we are today. We're not down as much as the futures are down a little bit less than the cash. So interesting to see. The gap is narrowing. So is this just a dead cat bounce? Anybody's guess. We're still looking at a bear market rally potentially.
All right, like Joe Tigay with the deep VIX walkthrough, we'll be watching that difference between the futures and the spot right now. Joe, nice work here today. Trading some square, talking volatility, VIX down. For now, we'll see if it holds.